Alaikum. I'd like to introduce myself. My name is Umar bin Ehsan. I'm the CEO for Hubble Private Limited. And I would like to welcome all of you to the Cashless Supply Chain 2020. This is part of the Innovation Challenge Facility organized by the State Bank of Pakistan, where Hubble participated in trying to create a platform for supply chain payments. We will start with a short video of how the pilot was implemented, and followed by comments by our chief guest, Madam Deputy Governor Seema Kamil.
The current supply chain payments ecosystem is diverse and complex. There are several challenges and nuances within each corporate supply chain, and that brings its own set of diverse problems around turnaround time, cash realization, physical transaction, and then the reliance on few banks or a single bank and reliance on their network to process these payments. This makes the turnaround time slow, close to 2 to 3 days, and that results in delayed supply chain decision making. The bulk of the problem around supply chain payments is around retail cash collection. There's a great deal of informality and asymmetry around this process. Cash-dependent transactions require a great number of order bookers and delivery resources that are engaged in the collection of cash.
What happens is, because of the handling of cash and uske saath associated risks of theft, robbery, leakages, you see a lot of inefficiencies in the market, jahan pe the money does not reach either the manufacturer or the distributor on time, and therefore the production cycles of these products gets broken, and therefore consumers often do not get the products on time.
Large manufacturers have to rely on a number of banks for cash collection and reconciliation. There are certain large-scale manufacturers that employ close to 12 banks to make sure that there is omni-banking available for their distributors.
Most of them are doing this based on their own banking network, and therefore at times to connect or to digitize the entire order to cash, you need to have one network, which can be a problem between the manufacturer, distributor and retailer. With Hubble's approach, we're hoping to move into a space where it won't matter which bank you work with, as long as a retailer is banking either through conventional bank or through one of the fintechs. They'd be able to process those payments between themselves, the retailers, the distributors and the manufacturers in a seamless way.
What Hubble provides is a single platform for the distributor, retailer and the corporate manufacturer to be able to process the entire order to cash collection process from the retailer using omni-channel payment mechanisms, using wallets, agent network or online banking or the branch-based network to make digital payments to their distributor. At the same time, distributors are able to use omni-channel channels of any bank of their choice that they prefer to work with to make digital payments to the corporate manufacturer.
As compared to our existing mode of payments, where we have like few banks on board and few options where they can get their deposits made, Hubble have a whole range of banks available on their portal. If they want to pay cash, they can also use EasyPaisa and Jazz Cash to get their cash deposited into their wallet accounts and make payment from there.
State Bank has been implementing the National Financial Inclusion Strategy, under which we have the headline target of opening up 65 million active unique accounts. Under this strategy, we have been successful so far in opening 73 million unique accounts. However, the activity in these accounts has been low. Only 65% of these accounts are currently active. The National Financial Inclusion Strategy has additional targets. We have an explicit target for reaching out to SMEs, and we also have an explicit target for reaching out to small farmers. Now that can be achieved through digitalization of supply chains and value chains in agriculture. And I think this Hubble initiative is going to go a long way in helping us to achieve that target.
This pilot has been immensely useful for Hubble to learn about the challenges that the retail and distributor segment face around digital financial payments and how we can get them included digitally and financially. Some of the things that we've learned have helped us in coming up with the right operational plans, especially around how to motivate people towards digital payments, how to use the current corporate supply chain as a vehicle for pushing digital payments, and also how the problem of liquidity and immediate payments can be addressed by supply chain financing. Going forward, Hubble will rely on scaling up its operational capabilities across the various supply chains that Pakistan corporate sector has, and enabling transactional uptake and digital support so that the agnostic channels that Hubble provides are enabled using Hubble's digital supply chain payments and financing platform.
With that short introduction, I would like to welcome Madam Seema Kamal to give her comments on this initiative around the Innovation Challenge Facility and how supply chain payments can be digitized with the use of the agnostic partners such as banks and corporate supply chain partners.
Assalamu alaikum ji, can everyone hear me, I hope?
And we can hear you.
Yes. Assalamu alaikum, Omar Saab, and it's a great pleasure to be here. This is a very exciting initiative, and first of all, I'd like to congratulate you on what you're doing, क्योंकि पाकिस्तान के लिए ये एक बहुत ही अहम चीज़ है. So I understand that your pilot has been a success, and we wish you the very best for the future. I'd just like to give a little bit of context in what I will talk about. And I think जो पहली चीज़ मैं कहना चाहूँगी कि as a regulator and as an enabler, स्टेट बैंक का क्या इसमें रोल है. सो पहली चीज़ ये है कि वी वांट ए सेफ एंड सिक्योर फाइनेंशियल सेक्टर. सो ये हमारी बिल्कुल ओवरआर्चिंग एम है कि हमारा जो फाइनेंशियल सेक्टर हो, वेदर इट इज़ फिनटेक्स या लाइक योरसेल्फ, या बैंक्स हैं, या माइक्रो फाइनेंस बैंक हैं, या ब्रांचलेस बैंकिंग है, या टेलको बैंक्स हैं, all of them must be safe and secure. तो ये तो एक absolute rule है. And so I'm glad to hear that you're moving forward with that. मगर एक और भी हमारा रोल है जो उतना ही important है, and that is financial inclusion. So उसके तहत हम चाहते हैं कि हमारी इकोनॉमी में जो बिल्कुल कैश ड्रिवन है, और अभी भी कैश ड्रिवन है, जितनी भी हमने मेहनत की है, अभी भी कैश इज प्रिडोमिनेंट, तो उसको हम कम करें और फाइनेंशियल इंक्लूजन बढ़ाएं. सो जो आपका प्रोग्राम है, इट फिट्स इन वेरी वेल with all of these. Just थोड़ा सा मैं will tell you about State Bank's own digital roadmap. हमने कुछ सालों में काफ़ी कुछ किया है. We've rolled out the Electronic Money Institute rules for simplified digital onboarding of merchants, standard QR codes for payments, and जो हमारी एक flagship हमने last year launch की थी with the help of the World Bank, was actually the National Payment System Strategy, जो बहुत important है हमारे लिए. इसमें we've tried to build a modern and robust payment system for the country that enables the provision of cost-effective and easily available digital financial services. And the flagship product for this, which I'm very pleased to announce, which is about to be launched in the first use case, the rollout will launch, is the micropayment gateway, which has been done with the assistance of the Bill and Melinda Gates Foundation and Karan Das, amongst others, as well as DFID, now known as FCDO. This micropayment gateway, you'll be happy to hear कि जो पहला है bulk payments, and then it will move towards retail payments as well as push payments. We believe that this will transform the payments ecosystem in Pakistan and provide a full-fledged solution to the challenge of branchless banking wallets, interoperability, and result in a rapid achievement of our goals of national financial inclusion. And your initiative is really very much part of our thinking, both on financial inclusion and on payments. So what you are trying to do is extremely important. And as we know, and as I think all of you know, this supply chain is huge. We all know that it's massive. Perhaps we don't even have a cogent idea of how big it might be. But the majority of the supply chain and the various value chains, whether it's in agriculture or in the urban areas, and from manufacturer to distributor to end customer is cash and paper based, which not only makes the economy undocumented, but is also very inefficient for all players. And so it's very much in the interest of our interest, in the interest of the country, and to have entities like Hubble who will assist in this. Because corporate supply chains have been, for us, a big challenge due to the presence of cash, and particularly the small entrepreneur, whether he's retail or whether it's urban or whether it's rural. They're all become inefficient and illiquid, as you have pointed out. So the synergies between digital financial services and the corporate supply chain actors carry immense potential for digital financial inclusion. This will not only create transparency for corporates, but provide a bankable identity to unbanked distributors and retailers. It's very important in this that they see value in this. Because I often talk about what they see as the elegance of cash. Because they feel often that cash is simple, cash is easy, and perhaps good for them, but not really for the country. Cash is anonymous. So there are these challenges that we have to face. And if solutions like yours can help to resolve this problem, then we move a long way. So I think we're entirely aligned. We're very happy that you won the Innovation Challenge Fund. And I understand that you now also, and maybe we'll talk about it more, have also got some increasing equity. And that entities like yourself and platforms like yours can actually connect everyone to everyone's advantage. Because it's very important that no one is left out of this chain or doesn't feel that that chain that you are creating has value for them. So as we move forward, I would very much like to hear about the challenges that you're facing. And if there is anything we can do to assist in that. Zahira, ek hamara ambit hai. As the state bank, we are not FBR, we are not, but we can also be a voice there for sure. But if you feel that there is anything that we can do to assist you to move forward and to take this into something that is a visible change for Pakistan and for inclusion, then we would be very, very happy to assist you in any way that you feel is doable and practical. And obviously, jo maine pehle kaha, keeps the financial sector safe and secure. Now, I have a background in commercial banking, and I understand how these collection and cash management mandates work, which you are trying to, if not replace, at least ease. So as जैसे आप कह रहे हैं किसी के पास 12 बैंक होते हैं, किसी के पास 8 बैंक होते हैं, and then they're banks, and then they have mandates which run on either fee or they run on float. So if they run on float, फिर उसमें वो जो आप कह रहे हैं 3 से 4 दिन लगते हैं. जो बहुत बड़ी corporates हैं, they minimize the float period. I know they would want it at day 0. But on the other hand, there is a fee also, which then disrupts the supply chain. So I understand completely what you are talking about. I've been on the other side too, where these cash management mandates, which the banks talk about, are there. But I'm also very happy to see that in the panel discussion that follows this, my discussion, we will talk about how you are partnering with banks, because I think the best way to move forward will be the collaborative way. While you've bought in something that is very, very important, you will also have to bring in bank players so that all works seamlessly and there is something in it for everybody. All, whether it's the retailers, the corporates, the banks, and then entities like yourself. So I'm very keen to hear, and I wish you absolutely the very best. And as I said before, if your success would be our success, and the success of the country and the economy. So my very best wishes with you, and please do let us know what we can do to assist. Thank you very much.
Madam, for those kind words. this is a source of encouragement for Hubble and for the rest of the fintech industry. The idea is that Hubble itself, word in Arabic means rope, and the idea was that it turns out to be a platform where all the ecosystem partners can work without sort of disrupting anyone's value within the whole supply chain ecosystem. It's a model that only works in partnership with banks. Uh, Now I'd like to move ahead towards the presentation of what this implementation was about. Before I start that, I just wanted to give a brief introduction on how Hubble came into being. Uh, I started about 4 years ago working for the Federal Board of Revenue on the digitization of tax collection, worked very closely with the State Bank Finance Department and the Payment Systems Department to digitize tax collection. And through that process, I realized that this is something that would be required for supply chains across the corporate sector. And in that sort of awakening, we realized that corporate sector hasn't really done enough to be part of the digital payments infrastructure. So this is where the idea of Hubble was born. And soon enough, we realized that this segment has its own complexity, that there are good reasons why it hasn't turned cashless. There's a lot of issues around transparency. There are issues around the complexity of the transaction, the diversity of transactions. Reconciliation is a very big challenge. The turnaround time for the order to cash is fairly slow. And all of this, the disconnected experience that came out of it was something that Hubble resolved to provide solutions for. Initially in our discussions, we'll be working very closely with the State Bank of Pakistan in terms of discussing these ideas that we want to be the first to work in the B2B space. And in that sort of conversation, we learned about the Innovation Talent Fund sponsored by DFID. And this is where, through a very arduous process, we got selected for this pilot implementation. And the basic premise was that if you cannot digitize the institutional structure for the supply chains, for the various supply chains in Pakistan, you will not be able to financially include a major part of the population, because individually the bottom-up approach requires a lot of capital, requires a lot of resources, and you have to ensure that the corporate supply chains are partners in this whole journey. So this is the idea that we ran with. There was a lot of ideation workshops done around supply chain financing, around digital payments, and basically creating one single platform that allows the banks, the corporate partners, the manufacturers, distributors, sub-distributors, wholesalers, retailers, the wallet providers, the agent networks, all of them to be blended into one single platform. So that's the idea with which Hubble as a solution came into being. Now, if you look at the solution, you would see that this is what in the last 1.5 years, Hubble has created as a platform where a corporate ERP or a corporate primary and secondary sales system that currently processes batch-wise invoices or payment information for them has to be connected in a way that it's a single digital platform that connects them, connects their distributors, their retailers, and then provides an omni-channel sort of banking network for digital connectivity, whether banks have online banking or they have USSD payments or they have agent-based payments such as the microfinance banks, or they have e-commerce experience, single experience payments. All of the context that needs to travel across banking channels, whether it is for payments, the recon, or for financing, is something that Hubble resolved to aggregate as a digital supply chain platform. So the way it is constructed is that it works in partnership with the banks directly and with the PSO, PSPs, and the EMIs, the wallet providers, and all the new supply chain financing partners that wish to be part of the financing, that wish to finance the distributor and retailer invoices, relying on Hubble as a third party to provide the fidelity of the invoice and the ordering data and the history that comes with it. So this is the platform that was conceived as part of this pilot project. And then the later part of the project this year was focused on actually implementing it in different sort of geographic situations. So trying it in thick urban, a Karachi dense populated area, or the outskirts of Karachi, or in a village locality in central Punjab, or in a second tier city in Punjab. All of these pilots were run in partnership with the banks and the MFIs to see what is the response. In multiple modes, we realized what works and what doesn't work. Some of the key learnings that came out of this. So some of the key learnings that came out of it was that it is very important to engage your corporate supply chain partners, the manufacturer, their sales team, their regional sales teams, their sales finance teams, their financial controller, treasurer. They all need to be aligned, and they need to champion this whole transformation throughout their value chain. They have to believe it. If they don't believe it, they're not going to drive it, and they are your biggest partners in trying to digitize the value chain. The other problem is obviously there's a lot of awareness issue on the retailer side, especially around conversion from physical to digital, not just because of the inconveniences around that, but also around the fact that people are just generally afraid or apprehensive around any transparency. So that's obviously the biggest challenge that we had to face. And we had to come up with some innovative ways in trying to counter that challenge. Partnership with banks and wallet providers is very important. Omni-channel and omni-mode, omni-banking channels is very important, and not just from a payment perspective, but also from a financing perspective. Also, if you are going to push immediate payments, if you're going to push immediate settlement, then it's very important that that kind of efficiency is offset, is supported by pumping in liquidity into the supply chain. And that can only happen by having supply chain financing work for the entire value chain. These are the key learning outcomes that are going to be at the center of our strategy going forward with this arrangement. As Madam Deputy Governor mentioned, that going forward, Hubble is now in the phase where we're going to operationally scale our capabilities. Where we are very, very happy that we have recently welcomed an equity partner into the organization with a long history of manufacturing establishment, route to market, especially around pushing digital inventory across different cities in Pakistan, having that support capability to facilitate that. And that is, what the next few years hold for Hubble, where we're trying to provide transactional support, digital onboarding, the SLA management of digitizing the supply chain, using these new resources that we have available. So some of the key benefits that comes out of this immediately, and these are all quantifiable benefits that we can demonstrate, that we have demonstrated to some of our customers. And as Madam mentioned, that it has to be something in which everyone wins. From the bank's perspective, it enables any major bank to get entrenchment into the supply chain. There are banks who can serve from top to bottom, that they can provide corporate banking to the manufacturer, business banking to the distributor, SME banking to the sub-distributor, wholesaler, and wallet-based banking or agent-based banking to the retailer. So there's deep entrenchment for banks. And then there's financing. Like Madam mentioned, that how does it complement the throughput income or the float income? It also supplements it by financing, where banks are able to now rely on data that helps them finance distributor transactions or retailer transactions. And then it shifts the responsibility of corporate aggregation on a fintech like Hubble, that they don't have capacity or the ability to be flexible to meet the needs of every supply chain. Now, pharmaceutical or construction or steel or FMCG they have their own nuances. And that kind of flexibility needs to be captured by a fintech that is agile and quick enough to respond to those changes. From a corporate perspective, the efficiency in the supply chain decision making is the biggest factor. Then optimized liquidity in terms of quicker settlement or multi-batch settlement, and then the contextual transparency, which is very important for organizations that have complicated route to market. they need to know what are they selling at the last economic operator. And that is of significant importance for them when they're rolling out incentives or benefits. From a distributor perspective, who relies on a large fleet of order bookers and delivery people, it is a significant cost reduction because the order, invoice presentment, and payment can be digitized. So that feeds into efficiency and then safety around theft, around leakages, and now with the pandemic, the biohazards of physical interaction. Also, the excess liquidity helps the distributor buy more. From the retailer, it's all about availability, that he's not relying on physical interactions to make sure that he can place an order. And the safety that comes with digital payments, and then again, access to liquidity so he can buy more if he has capacity to sell more. From a regulator perspective, it allows more transparency, whether it's the central bank or it's the Federal Board of Revenue or other tax authorities who seek supply chain transparency, financial inclusion by means of using the corporate assets in pushing digital enablement of the retailers and wholesalers. And then for the consumer fintechs who are working, striving very hard to push for consumer to retail payments, POS acceptance, it sort of feeds into it. And then the supply chain reliability. In the extreme lockdown that we faced earlier this year, we realized that there were a lot of discontinuity in the supply chain across Pakistan, and generally ordering and payments, if it's interaction-less and it's digitized, that sort of ensures the reliability of essential supply chains. These are some of the benefits and much more than this. We've demonstrated that there are more benefits than this, but the essential benefits that drive value for each stakeholder within the supply chain. So with that, I'd like to thank some of our key partners that helped us with this whole endeavor. The State Bank of Pakistan, with the NFIS team, the ICF team, especially Noor Saab, Imaduddin Saab, Faika Naseem, who helped us tremendously in the entire process, especially post-COVID-19 lockdowns, where we were struggling with operationally putting it on the street. The help that we received from State Bank and DFID was instrumental. We'd like to thank our partners, National Foods and Unilever. The pandemic put a big strain on them as well, but they still continued to help us in trying to put the pilot on the street. We'd also like to thank Mizan Bank for the multilateral relationship that they've developed in helping us with settlement of funds, in connectivity for direct debits, in supply chain financing. Murabaha Hubble has launched now by virtue of this pilot implementation, the first Islamic supply chain financing platform, entirely digital from retailer to distributor to manufacturer. And that is the help that we've gotten from Mizan Bank, who's been helping us straight from the beginning. Also, I would like to thank OneLink. They were instrumental in the actual payment transactions. All of the transactions that we've processed throughout this pilot was supported by OneLink. Easy Pesa and Jazz Cash put foot soldiers on the street. So when we're talking about Gujranwala or Kamuki or Sorapur, they were there with us trying to help us in trying to push financial literacy, opening wallets, helping the retailers transact on their agent network. So a big thank you to Easy Pesa and Jazz Cash. So you can see that the pilot itself is reflective of the partnerships that are required to make sure that the entire supply chain works in a digital fashion, and that everyone stands to benefit commercially from these kind of transactions. So I would really thank all of these partners who helped us, and especially with all the things that happened because of the pandemic and the restrictions that were put in, but still they persevered and they helped us in getting across the line. I'd also like to thank the Payment Systems Department for recognizing the unique needs of business payments around the requirement for contextual payments and the immediacy of payment settlement that the large corporations require. So with this collective effort, we have now a pilot that's completed, and going forward, we will seek help from more partnerships that we've developed over the last 1 year with Standard Chartered and with other banks that will help us scaling up this platform and really ensuring that digital financial inclusion is extended by virtue of the corporate supply chain partnership. So With that, I would like to request Waqasul Hassan, who's representing DFID, and would like to share his thoughts on the Innovation Challenge Facility, as well as this pilot project. Thank you.
Thank you very much, Umar, for providing the opportunity. I think you have very adequately covered the model. I would start with Bismillah Rahman Rahim, Madam Seema Kamil, Umar, CEO Hubble, another financial sector colleague. Assalamu alaikum. When I was starting notes for this session, I was actually reminded of the first branchless banking conference, which was held at the State Bank of Pakistan in 2010. It was an interesting time. Only one branchless banking solution was out there, a few months old. It was creating its footprint across Pakistan. One more solution had the license to pilot test its product, but was not really still in the market in full force, so to say. And now, 10 years down the road, when I was looking at today's topic, we have come a very long way. I can tell you that when we were holding that conference, there were other players out there, telcos, banks, who were still assessing whether or how to venture in this digital finance space. And people would really argue that whether digital finance would work in Pakistan or not work, or the traditional model would still continue or not. And in that conference, it was I would say, a bit of a bloodbath, and the old State Bank colleagues would recall that how some players actually realized that their models were not efficient enough to compete in the market. Today, we are talking about this very specialized topic. As experts would call it, it's a theme-based discussion on digitization of supply chain payments and financing. It's in terms of sophistication of discussion, we have really come a long way. It's been an incredible journey. We have witnessed evolution of regulatory framework for digital finance, licensing and rollout of multiple branchless banking solutions, payment service providers, and electronic money issuers. We now have approximately 200,000 active agents, over 58 million active accounts, and with nearly 2 billion rupees transacted in last quarter through the branchless banking channels. An interesting fact I would like to highlight is that the average size of transaction is around rupees 4,154, which means that the service, BB services, branchless banking services, are being used by small clients. 23% of the active accounts are women, and you can find BB agents across the country everywhere. Now, this data, which is available on State Bank's website from its quarterly progress reports, can be sliced and diced in many ways. The fundamental point is that the building blocks of the digital finance in the country have started taking their shape. Some would argue that the digital finance is perhaps the only area in which our financial sector has demonstrated promise and significant innovation. As a development practitioner, and on behalf of my department, Foreign, Commonwealth and Development Office, FCDO, I would like to note here that this would not have been possible without the continued leadership of the State Bank of Pakistan. As recent as yesterday, literally, it was heartening to note that the governor and deputy governor held a high-profile consultative session on banking on equality policy aimed at reducing the gender gap on financial inclusion. This is impressive commitment. SBP is indeed moving ahead with a whole suite of development finance initiatives, several of which were mentioned by the Deputy Governor moments ago. A full range of projects from housing to payments to credit guarantee to digital financial inclusion are on the horizon. The scale is unprecedented. I must also note here that the support has not only been shown by the senior leadership, i.e. governors and deputy governors, but also, and equally importantly, by the core staff of the central bank, the Development Finance Group. Samar Saab, Noor, they have been really the constant and permanent features of this whole landscape. They were always approachable, passionate about the financial inclusion agenda, maintained momentum across changes in the leadership, and have created wider institutional support in the Ministry of Finance and other regulators, SCCP and PTA. We at FCDO think we are very fortunate that we were a partner in this journey. FCDO's financial inclusion program was being implemented by the State Bank of Pakistan, and it has been at the center of financial inclusion initiatives in the country. Two major credit guarantees, one for microfinance, other for SME finance, were set up under FIP. FIP supported first and seminal branchless banking solution of the country, and then went on to run challenge fund initiatives from which several industry players benefited, including Hubble, our host today. The National Financial Inclusion Strategy, which is the primary strategic document for the Financial Inclusion Initiative, was formulated under FIP. The law on secure transactions and then the actual setup of a registry was funded under FIP. The national savings centers across the country have been digitized, and the work for digitization of SCP is underway. The FIC experience has given birth to Karandas and our partnership with the Gates Foundation, which is further pushing the frontiers of digital finance in the country. We will soon hear, and Madam Governor, Deputy Governor mentioned the launch of the payment gateway. Let me speak about the context in which we are operating, however. Great deal of effort has gone into the supply side, but is all good on the demand side? Despite all this, currency in circulation, which is an indicator of kind of informality, the money outside the banking system, basically, CIC is growing at a pace faster than the overall monetary aggregate growth. At the end of the last fiscal year, 2019-20, the overall currency to deposit ratio stood at around 42%. This is highest since June 95, i.e. in 25 years. Another way to look at it is to compare currency in circulation to M2. The ratio exceeded 25% at the end of June 2020, whereas for India and Bangladesh, it is less than 15%. Now, why is this important, one would ask? For businesses, as Umar also mentioned, cash transactions are expensive, unsafe, and inefficient. For central bank, it weakens the transmission mechanism of monetary policy. And for overall economy, evidence shows a negative correlation between higher CIC and economic growth. This is because currency outside banking system typically has lower velocity of circulation and also does not allow bank multiplier to increase the use and reuse of this capital. We need to see the effect of other policy levers too. Madam Deputy Governor also hinted at that, in particular those which are tax related, to fully incentivize the use of emerging digital finance solutions by the businesses and supply chains, which is the focus of today's discussion. It is also time that a comprehensive diagnostic of fintech, regtech space is conducted to make an assessment of where we stand, where we want to reach, and for what milestones need to be, and for that, what milestones need to be achieved, both on the supply and demand side. Regulators around the world have also found sandboxes or innovation offices useful tools to engage with the market and help introduction of products which meet regulatory compliance criteria, don't cause unintended systemic risks, and meet the requirements of consumer protection. With these thoughts, I would finish here. I congratulate again Hubble for the launch of its pioneering solution and for holding this session, and wish you all the best for the dialogue later in the day. Many thanks for providing me the opportunity to represent FCDO. Thank you.
Thank you, Waqas. Thank you for those words. So with that, I'd like to start the panel discussion. Let me first introduce the panel participants who will be joining us. We have the additional director from State Bank Agri Credit and Microfinance Department, Mohammad Imad Al-Isa, and working through this project right from the beginning. From Unilever, we have the Director Strategy and Transformation, Digital Transformation, Fawad. And from Natural Foods, we have the Chief Financial Officer, Farhan Rizvi. From Mizan Bank, we have the Head of PMO and Digital, Ali Imran. And from Standard Chartered, we have the Head of Transaction Banking, Shiraz Heather. And from OneLink, we have the Chief Operating Officer, Bashir Khan. So the panel has been designed to include partners who are actually part of this pilot project. and we wanted them to sort of share their thoughts on some of the concrete things around the challenges and opportunities around business payments and business financing as well. I'd like to start with the banks, and I'll ask Shiraz to answer this question. It's a sentiment that Hubble has been maintaining for a very long time, that that digital payments currently in Pakistan are very consumer centric. That they're all centered around the traction that you can gather from the consumers. So, what is the new shift around digitizing business payments for supply chain, focusing on B2B payments? Can you give a perspective since you come from transaction banking?
Yeah, so I was saying thank you very much. So to answer your question, I think we've already started to see increasing demand of digital payments in the corporate space. I mean, the last 9 months have surely been the most busy in terms of deploying digital cash management solution for corporates across industries and segments, which has kind of fast-tracked our efforts around enhancing our product offering, whether it be in-house, whether it be through best practices from our group, or even through collaboration with Hubble, for instance, and other fintechs. But for me, the real question is that enough? I think to accelerate digital adoption in the B2B space, the entire ecosystem has to come together to crack this opportunity, whether it be corporates, banks, fintech players, or PSP, PSOs. Most of these are on the panels. And of course, guidance from the regulator, like the Deputy Governor mentioned. In my opinion, for banks, it is important to open up limits to facilitate 24/7 B2B payments, like we've done for tax payments. Co-create solutions with corporates, which offers flexibility to their distributors to transact through bank-agnostic channels, last mile visibility on sales, real-time information, and so on and so forth. And that's where Hubble comes in. Also, we need to rigorously implement preferential pricing to encourage digital payments versus paper-based. Banks have done some work around it, but we need to do more. I think COVID has really re-emphasized the need for banks to achieve speed to market, and a few questions we need to ask ourselves. Are we ready to provide customized solutions at pace? Does our technology stack allows us to do that? If not, are we nimble enough and open enough to collaborate with fintech third parties to achieve scale and last mile delivery? Do we have the right governance frameworks around collaborating with fintechs? I think these are the various questions that we need to address to move on, make use of API banking, open banking, to collaborate with fintechs. And I think most importantly, can we leverage upon the rich data being generated through payment platforms to develop credit scorecards, allowing us to structure sustainable supply chain finance solutions? This is also very important because payment and financing goes hand in hand. Make greater use of risk sharing programs by the central bank, like DFID also mentioned and the Deputy Governor also mentioned. This is certainly, there is obviously work being done, but we need to accelerate to achieve greater impact. Last but not least, I think it is very, very important for corporate entities who can play a leading role in creating greater awareness for their value chain players to transact digitally. Also, maybe incentivize these players to change behavior. The banks can certainly partner with them to create more impetus around this. So these are my few thoughts, Umar.
Thank you, Shiraz. So my second question is for Fawad from Unilever. Fawad, there are a lot of corporations experimenting with direct-to-consumer and retail-facing digital solutions. What's the burning need now that these kind of transformation and these kind of experiments need to take place? Why now? Why hasn't this happened before? Can you just give your thoughts around that?
Assalamu alaikum, everyone. So thank you for having me here to represent Unilever Pakistan. And assalamu alaikum to everyone else who's listening in. So jumping right into your question, I think there are, from a FMCG perspective, I would foresee four key, business cases for digital transformation in general. First one, increasingly the cost of acquiring custom consumers is going up. So how can we use digitization to reduce that? The cost to serve, because we're in a business which moves physical products to consumers, the cost is going up. How do we again digitize to reduce that? And then thirdly and fourthly, kind of the inward looking efficiencies or the accuracies required, which in today's day and age, you can't do this manually anymore. So therefore, the case for overall digitization is there. When it comes to specifically the cashless payment side, which is from, say, moving from the consumer to, say, the business to business, I think it is very clear to us when we look at our supply chain that when we go into the market and sell our products to the retailer, there have been at least the biggest excuse that we get for not making that sale is that they don't have the cash at that point in time because they're dealing with so many other FMCG players and so on. And therefore, what we've seen is we end up losing sales if the retailer does not have cash. What instead happens is whenever the retailer says they don't have the cash, our distributor then goes out and offers credit. Now, in an increasing time where the cost of credit, cost of capital goes up and down, and then the overall costs continue to go up, it becomes very difficult for distributors to maintain their financial viability if a big chunk of their working capital is being extended further on as credit, as informal credit, bill to bill credit as it's called in the market, versus them managing or putting that money in inventory. And therefore, the entire value chain or the supply chain kind of comes under stress whenever the credit requirements or the payment cycles are broken. And therefore, increasingly, the need to again use technology, and as Shiraz mentioned, designing those solutions, be it the credit part product, the entire UI UX around what the specific problems are, I think will help all of us to kind of help take out those inefficiencies from the system. Now, as far as we are concerned from a FMCG perspective, do remember that the entire consumable goods industry is close to $150 billion, and 99% of that is running on cash. If we have around 700,000 retailers, 15,000 of them hold the bulk of the economic value. And the bulk, the majority of the retailers are unbanked and are dependent on informal credit or lending mechanisms, which is where these kind of products help us to reach out to them. Now, what has changed significantly? Of course, this was a change which was happening as is even before the pandemic, is that your overall digital quotient, if I may say so, of the country was increasing. So with smartphone penetration, mobile penetration, internet penetration going up. Of course, in the pandemic, we've seen those numbers really shoot up. Currently, the latest estimate tells us 80 million of our Pakistanis have a smartphone, which means they're using internet, which is a very high number if you compare it with any other country as a percentage of total population, which is kind of using the internet, has the ability to go digital. And therefore, companies like ourselves will always look at, again, ways to kind of reduce the cost of acquisition, reduce our cost to serve, and increase those efficiencies and accuracies using digitization. So that's really our perspective from this side of the fence.
Thank you, Fawad. I think Ali Imran is back. I'll circle back to the same question that we asked Shiraz, which was why are banks or the fintech industry, the digital financial services industry, focused on consumer payments? And now what is the shift that we can see around digital business payments, around specifically supply chain payments?
Thank you, Umar. Thanks for having me. Basically, this alternate delivery channel has a history. Basically, they started with the vision to shift the load from branches to other channels, which are less costly. So we start seeing ATMs, call centers, and IVRs, and then later on, it moved on to internet banking and mobile banking. So this is how basically consumers start shifting from brick and mortar branches to other channels, right? As I mentioned earlier. So that's one part. And later on, use cases start building around consumer. Another important thing in nowadays is consumer behavior is shifting, and the use cases of consumer side is comparatively very simple. So I think this is the reason why banks put more focus, initially put more focus on consumer. All they need to is because banks are standing at the last mile of the transaction, which is payment. So this is how consumer journey goes on. But recently, things started happening on corporate side, commercial side, and supply chain side. So the transaction on these sides are complex in nature. It's not simple and straightforward. It has some business logic. It has some business checks. Other entity is taking the delivery. Some other entity making the payment. So I think coming back to your original question, that consumer comparatively simple. There are volumes, but now banks are transforming towards automating and digitizing the payments of supply chain, corporates, and other areas.
Thank you for that, Ali. I'd like to ask Farhan Rizvi from National Foods. What do you think is the impact of supply chain financing across the entire ecosystem and the digital intermediation required? Not just financing, typically working capital finance is focused for the large manufacturers, but when it comes to distributor, the sub-distributor, wholesaler, and down to the retail level, especially around the aversion around contemporary banking. What are your thoughts around how that fuels up your supply chain efficiency or your liquidity as a corporate manufacturer?
Yeah, Assalamu alaikum everyone. Thanks so much for the opportunity. So I think from a FMCG perspective, as was already mentioned, it's a pretty large sector, and I see within Pakistan we still have an orthodox system. So we got a very large number of transactions which is running operations day in and day out. A lot of the distributors today are not advanced enough for solutions, and that's why companies have to step in and we start building their capabilities, both from an IT perspective. I think where companies lack, and this is where Hubble comes in place, how do we bring the distributors channel back into the cash transaction mode? So there are some solutions available, but I think the solution is pretty unique. It has a very significant implication on distributors. Generally, how distributors raise their capital is they've got inventories and they go back to the banks to have a pledge against those inventories, and that enables them to get some credit. Distributors then have to go back into the market to retailers, and those retailers don't have access to cash. So what happens is essentially companies end up using a lot of their own muscles to speed up that cash in the market. Now, having said that, as we know that a large part of our economy is still undocumented, and we're unable to trace a lot of those transactions which take place because they're purely cash. This means that a lot of retailers who want to do a lot of business, either because of transparency issues or their inability to access to cash, are unable to raise that kind of capital. So what happens is that companies continue to take more and more steps, but it's a pretty slow process because it's a pretty large country. We've got a huge population of distributors moving through. I think digitalization would be the key to access to that cash, because once it's documented, it's easier for banks to start lending more effectively. That credit history and credit check is the easiest way to success. And just imagine those distributors who see those opportunities now are unable to raise more, come back to companies asking for more credits, and there's only certain amounts of limits we're going to be able to give them. And that's why it unlocks a lot of those transactions. And I see this to be a very transformational thing for Pakistan, especially with some of the steps which government is already taking now. We could see a few years ago out of smartphones coming in, was going to be really successful in countries like Pakistan and India. And my God, look at the results now. So it's outstanding. So I don't see a reason why this cannot scale up at a much faster pace. Uh, I personally think that probably looking at supply chain on the other part, that is even larger than this because a lot of our suppliers also rely on how transport models are dealing with distributors. So an average distributor generally looks at about 35 to 40 routes. That's a day in and day out transaction. Look at the amount of employments which are generated as a result. And if they've got easy access to cash, their ability to service those markets at a much faster pace would be excellent. If I look at some of the categories today, highly penetrated categories. So in an FMCG sector, we generally say penetration, which means something which is available or used by a consumer, let's say once a year. Well, look at usage, I'd say probably once a week or once a month. That's still pretty low when I look at Pakistan. This means there is ample white space available, and that microfinancing or cash availability is going to unlock a lot of those challenges. So when we talk about small and medium enterprises going up, this is how it becomes easier for them. And I think that's a solution which comes in. So that's how I think it can have a very significant impact.
Thank you, Farhan. I'd like to invite Shirhan Saab for some comments. Uh, the same question in a different sort of technical sphere. That consumer payment focus was there, digitization of consumer is happening, which is fantastic. We all support it. But for the longest standing PSO PSP in Pakistan, OneLink, I've had the good fortune of working very closely with Bashir Saab on FPR and Punjab government digitization. Uh, how government and business payments require a different set of payment infrastructure, and what are your thoughts as OneLink around the payment infrastructure required for business payments?
Thank you very much, Umar Saab. First of all, I would like to congratulate yourself and whole Hubble team to reach to a takeoff position after a struggle of 3 to 4 years. So many congratulations on this milestone. I would talk about 3-4 fundamental things and then give you the perspective in P2G payments. In my opinion, there are 3 fundamental steps which we need to overcome in order to encourage supply chain payments on long-term sustainable model. The first and the most important is removal of barrier to entry and providing a seamless and customer-friendly platform at affordable pricing. The other important area is highly available, secure, and robust transacting engine with quick settlements. And one of the other more important area is time-bound customer redressal mechanism in order to win the trust of end customer. As you mentioned, OneLink is the oldest PSO PSP. We primarily working in 3 roles. Our basic role is of an operator, where we manage the infrastructure and services. We also work as an innovator, and where we enable new product and services to grow the pie. And we are also working in the role of cultivator to develop and flourishing ecosystem for the players like you and many others. If I can share with you that our throughputs for the last 3 years, which would encourage players like you, and there should be high hope from the ecosystem partner that they can do well by adopting good ecosystem. In 2018, we transacted 377 million transaction of worth rupees 3.9 trillion rupees. And in subsequent year, 2019, we processed 590 million transaction of worth rupees 4.7 trillion. And you would be happy to know that this year, our budget was 750 million transaction of worth rupees 7 trillion, whereas we already crossed 1.4 billion of transaction worth rupees 8.4 trillion rupees. So how this happened? Let me give you a brief overview on this. In order to support B2B supply chain transaction, what we did in the first instance in 2017, we increased IBFT limit for the business segment. Previously, it was 10 million rupees per transaction. There's a transaction cap of 10 million rupees, which we increased to 100 million rupees per transaction. And we also introduced slave-wise IBFT transaction pricing, where we lowered the transaction fee of rupees 1 to the limit of 10,000 rupees worth rupees IBFT. We also removed barrier to entry and drastically reduced our joining fee of BPS platform from $10,000 to $1,000, and also introduced tier-based pricing on BPS as well, in order to encourage small, medium, and corporate sector. We also invested heavily in building infrastructure in that particular year as well. And now, alhamdulillah, our system is capable to transact 10,000 transactions per second. With the support and guidance from State Bank of Pakistan Finance Department, PST, our board of directors and government of Pakistan, we digitized FPR in the Q4 of 2018, where you are also part of their team of FPR, and whereby we introduced multiple clearing for P2G settlement thrice a day. We implemented bill aggregation and affiliate programs from our platform, where partners like you are working to digitize small to medium and corporate businesses. On pursuance of our fintech partner, and I must say Hubble was leading it to introduce same-day clearing on nominal fee for commercial biller, and alhamdulillah, we achieved that as well. We also implemented one bill to cater credit card, invoice, and top-up digital payment to overcome problems of biller on enablement of various channels of banks. As I mentioned, customer redressal mechanism is of vital importance. We amicably resolved more than 228K dispute worth rupees 7.7 billion in an amicable manner and within given turnaround time of State Bank of Pakistan. So in a nutshell, may I share the result of effort of last 2-3 years, we digitized more than 24 of government departments, where we are collecting their receipts. Primarily, they were on our BPS system, and those include FPR, you can say Pakistan Custom, Punjab Revenue Authority, Government of Punjab, 15 active levies, and also Sindh Revenue Board. We also enabled government entities on one bill platform. You would be happy to know that all military cantonment board 44 are now enabled on one bill. Beside Islamabad Capital Authority receipts, PESI, excise and taxation are also available on our one bill platform. In last 15 years or so, ATM was the main contributor in overall throughput of funding. In May 2019 was in fact the first month where IBFT overtook ATM by value. And if I compare YTD 2020 throughput of our three main business vertical, so we can compare it with 2019 figures. So in 2019, 1.1 trillion worth rupees transacted on ATM, which is merely went to 2 trillion, which is a 1% rise in transaction. On IBFT, the surge is from 2.5 trillion rupees to 4.6 trillion rupees as of today, which is more than 200%, and it's still growing. We launched FBR, as I mentioned, and in 2018 Q4, our BPS number for last year was worth rupees 470 billion rupees. And in this year only, we already crossed 1.5 trillion rupees, which is a rise of 325%. So with all these numbers, I think we are at the right trajectory and looking forward to an even promising 2021. We are also very happy to connect Hubble to the rest of the financial industry for the good of ecosystem. Thank you very much.
Thank you, Bashir Saab. These are very encouraging numbers and goes to show the commitment that is required for enabling government and business payments. I've been involved in both journeys. They both have their own diverse complexities. I'd like to now invite Mohammad Imaduddin Sahab, who's been essentially involved throughout the life cycle of this implementation, right from the beginning in the evaluation and now at the logical end of this. Imad Sahab, given your background in trying to push financial inclusion, digital financial inclusion, gender inclusion, what do you think is the role that the State Bank is playing in partnership with the FIs and the MFIs and fintechs in trying to push for small medium enterprises that are essential part of that cash dependent society?
Thank you very much for inviting me, and it is very exciting to see the way how this concept and this idea has translated into reality, basically. So I'm pretty sure that it won't stop over here, and it would expand, and it would become one of the success stories of Pakistan. By offering this platform and this services to all corporates and all banks would avail it, and many more institutions may opt for it. Acha ji, let me say a few things to connect the dots. First of all, what is this? It's all about digitization of supply chain. What does it mean? For me, it means one, yes, reducing the usage of cash, less cash within the economy. That has been touched upon. Efficiency, yes, payment efficiencies, ease of usage is one of the outcomes, which has been also touched upon by our other panelists and speakers. Supply chain financing is one of the biggest use case. Acceptance of digital payments at the retailer level is something very exciting. Basically, is one of the core which we want. That can create with the enablement of acceptance of digital payments at a retailer level gives the reason for a common man or common person to open and maintain a digital transaction account. Ab issue ye hai कि what happens is that a common man says that banking and bank accounts are for people who have money. It's not seen that like they need it because of our low saving levels. People have, we are a very low income economy. उस वजह से लोगों के पास वो रीज़न नहीं होता है कि why to open an account, maintain a balance in that account, and to use that account. So this is one of the biggest use cases to answer why. By digitizing whole supply chain, right from the B2B to the retailer level, what happens? It gives the touch point and the access point, which can be in millions, because retailers are estimated to be in millions. Million places where hundreds of millions of customers can do transactions through their cell phone, through their Easy Pesa accounts, through their JR's accounts, through their branchless banking accounts, through their mobile wallets, through their mobile accounts. ये वो एक्साइटमेंट और वो वजह है जो कि फाइनेंशियल इंक्लूजन के लिए बहुत इंपॉर्टेंट है. वन इज the cashlessness, but other thing is that, you know, provision of credit, provision of giving the reasons for people to open and operate account. In previously, you have listened that, you know, we have targets of having active accounts, active banking accounts, active account for women. How to do it? I see this is an opportunity that, you know, with solutions like Hubble, within the ecosystem, would enable us to achieve those kind of targets. Hubble is one of the contribute. Hubble's platform is one of the contribute. But at the same time, where does SME comes? Why the question is why SME doesn't take finance, right? It's about documentation. Banks are scared to lend to very small enterprises, just like Fawad has touched upon. Farhan Rizvi has also touched upon that. You know, अनलॉक करनी है उनकी डिस्ट्रीब्यूटर्स की लिक्विडिटी जो कि जाती है किसकी तरफ, इनफॉर्मल क्रेडिट की सूरत में, सेमी फॉर्मल क्रेडिट की सूरत में, किसको, to the retailer basically, you know. So you have to unlock that, but at the same time, in order to formalize the credit cycle, if, you know, collection of money from the customer is done to the retailer, so, you know, the income of retailer can be estimated, and at the same time, if the retailer is giving money to digitally to the distributor, so that also gives an assessment that how much a retailer or a very small enterprise is basically turnover is. That enables bank to make an assessment of how much credit it can provide to a small enterprise, very small enterprise. तो ये जो digital journey है, this digital journey enables a bank to make an informed credit decision basically. There comes the excitement basically कि हम SME स्मॉल एंटरप्राइज फाइनेंस को कैसे बढ़ाएंगे. स्मॉल एंटरप्राइज फाइनेंस को बढ़ाने के लिए we have taken a lot of regulatory measures. We have established small transaction registry. We have done so much awareness campaigns. There has been so much refinance schemes. There have been so much things happening. But in order to give, there are guarantees, but at the same time, what is needed is that end of the day, payments are not made through collaterals, payments are made through the cash flows, basically. Constructing a cash flow is the biggest problem, and by this, you know, banks can have a cash flow assessment of their customers and they can lend very easily. So it is exciting for everybody, like for the corporates, because their burdens lowers. For the distributor, they are much more, you know, their liquidity free ups, and at the same time, you know, for the retailer, that they are secure because they do not have to handle cash, and they can't be robbed because of the digital currency which they have in this account. And it's a big use case for the customers. So with this, you know, the financing from the bottom to the top, to the at least to the distributor and wholesaler level can be established and can be ascertained, and we can go for, you know, much with a much more confidence in lending. So what's the use case for the MFIs and MFBs, microfinance institution, financial institution? Microfinance institutions are grassroots. So for the micro loans also it would work. The transaction cost of giving loans would also reduce. And this is how you can do digital financing basically. So digital trade is cost effective. And with such kind of a solution and assessments in place, our reach can enhance in terms of supplying credit to small enterprises. Is the potential is immense, basically. So, so this is how I see it. This is how we see it, because we, under the NFIs 2023, under the vision that we have to service, provide credit to more and more small enterprises, we have to reach like 700,000 customers, finance 700,000 customers by 2023. The only way we can reach is going more, putting in more efficiency into system and providing more comfort in terms of credit guarantees, providing more comfort to the banks in terms of providing them very reliable data that how much business and entity is conducting. So this is, the biggest objective which we have, because everybody knows the SMEs, small enterprises, provides a bulk of jobs within the country after agriculture sector. So it's the biggest employer, and the potential of employment in small enterprise, small and medium enterprises is immense and untouched.
Thank you, Imad Saab, for that analysis. And I'd like to bring it to everyone's sort of knowledge that Imad Saab was a big help in this entire process in terms of guidance, in terms of sort of sharpening the solution to facilitate retail payments, how it's going to drive towards consumer payments, and around the financing aspect of it. And also in shepherding Hubble and the rest of the partners and trying to make sure that all the objectives are met. So with that, I'd like to close the panel discussion. I'm extremely thankful to everyone who joined on the panel, especially from the State Bank of Pakistan, Madam Seema Kamal, all the guests of Akasul Hassan, Shiraz, Imad Sahab, Farhan Rizvi, Bashir Khan Sahab, Ali Imran, that joined the panel discussion. I would also like to just take a brief moment to thank some of the people that have been instrumental in this entire process. Starting most importantly with Unilever, Zaim, and National Foods, Danish Waheed in finance, Tala Tahir in Easy Pesa, Tahir Qureshi in Jazz Cash, and on our friends and partners in Mizan Bank, Mohammed Munir Saab, eternal supporter who's been helping us through our beginning, Sharik Mubin, who's helped us with the direct enablement, Faisal Anwar Malik on the supply chain financing aspect. And it would be very important to call out some of the people within Hubble's team who have spearheaded this process, who've been part of the ideation, the product development, the bank integration, the platform development, the implementation and operations on the street. So I'd like to thank my entire Hubble team, but specifically the leadership team that worked on the pilot, Saqib Bashir, who's heading product at Hubble, and delivery and PMO headed by Faizan Zia, and the operations and finance and the legal aspects covered by Haris Wasim. Without these team, without the entire team of Hubble, under their leadership, this would not have been possible. Thank you everyone for attending the session. We will upload the video on YouTube so that you can share it and watch it on a later date if you've missed some aspects of it. And looking forward to introduce this and scale this across the supply channels in Pakistan. And thank you everyone. Assalamu alaikum.